You're talking about a $300 million project converting 500,000 square feet of office to residential at somewhere between $700 and $850 a square foot for new construction, commercial development projects in New York. In Salt Lake City, for new construction, I would probably be underwriting that at like 450 to 500. Generally, a development fee on a project this size is somewhere between 3 and 5%. And that gets charged to their investors. And then COVID happened. And so my entire team got laid off, and I had 23 open contracts across the country. I needed to make sure that we didn't get sued. Essentially, by the end of 2020, I had fully replaced my salary. I was making more money on my own than I was like as an employee.
Welcome back to Nikonomics. Today, I'm sitting down with Antonia Botero. She's an entrepreneur who founded a company called Mad Project, which is a commercial real estate development management company that handles the development process from concept to completion. And in this episode, you're going to learn how Antonia switched from architecture to development. You're going to learn how development fees work in large-scale commercial projects and how they can create a weird misalignment of incentives when project managers prioritize investor fees over salaries. You're also going to learn the importance of understanding market data and financial structuring before even bringing on an architect or a design team. But the bottom line is, if you're at all interested in commercial real estate development, you don't want to miss this one. This episode is for you. You know what to do. Like, subscribe, share with a friend. Love you guys, and let's just jump into it. All right, Antonia, welcome to Nikonomics. I'm really, really excited to have you here. Let's just get to the meat and potatoes. Tell me, what is your business and how do you make money?
Thanks for having me, Nick. This is super exciting. My business is called Mad Project, and we are a development management company. Essentially, we manage real estate development projects for other people. And that's basically how we make money.
So I'm going to ask you a bunch of dumb questions because I don't know. There is a weird overlap between SMB Twitter and real estate Twitter, but I don't really know real estate Twitter. So many of these questions are going to be really stupid. But when you say development, are you talking about commercial projects? Like we bought some ground and we want to build something from the ground up, or are you doing residential custom home builds, those types of things?
So we do mostly commercial projects, either multifamily or hospitality. That's sort of the niche where we play. We've also done some master planning resort communities. And it's mostly in the commercial space where the projects are part of an investment process rather than them being single family homes.
So I talked to Marilyn Modinger. Have you seen her?
Of course. She's a friend. She's great.
Yeah, she's freaking awesome. And I felt like such an idiot talking to her. Not because she used a bunch of fancy words, but she explained it so simply to me that by the end of it, I was like, yeah, how did I not know that? It seems so obvious. But, she's focused more on residential, and she talked about what her firm does, which is playing the quarterback, everything from design to architecture. She can even, in some markets, manage the sub crews and all that stuff. What does it look like for you? Are you kind of playing just the quarterback advisory role, or do you have more of a hands-on role in the projects you develop?
So that's actually super interesting starting point comparing to Marilyn and how she works, because she is an architect like you said, in the residential world. And she also does some commercial work too. And that background of being the quarterback really comes from that architectural training where you're managing all the consultants. And in Marilyn's case specifically, she also worked for a general contractor. So she has that experience. And that way we're kind of similar. I'm also an architect. That's my background. I am registered in several states. And I've also worked for a general contractor. But I've worked more specifically in the very large commercial side of things. She kind of went into the side of residential architecture. I basically always worked in commercial architecture. And as soon as I became a registered architect, I jumped ship and I went to work in development. So we kind of just took very different routes, but we do have that similar sort of background in architecture. She's also she's fabulous, by the way.
Yeah, she's very smart.
So great. So I went more into the commercial development world from the beginning. Even when I was an architect, I was working on commercial development projects as an architect.
Mm-hmm.
So that's really kind of the big difference. But again, that quarterbacking and that kind of management of the work and management of the whole team really comes from a background in architecture, I'd say.
So when Marilyn broke it down for me, she talked about all the different phases, right? There's the initial design, you're working with the architecture, you've got to get an estimator out, and then you bring the general contractor in, they work with a bunch of subs. Is it the same? I mean, obviously it's not the exact same, but are those the same pieces when you're dealing with commercial development projects like you're dealing with, or are there different pieces?
Yeah, they're different pieces. They're the same pieces. generally for the actual project. But the way that we're involved, and because of my background, like I shifted into development fairly quickly after I became registered. So I do have the architectural background, but then I went on to work in fully in-house for a real estate developer. And then you begin to see the different aspects of the work that happen before you even hire the architect or the design team at all. So we would look at generally like market data, understanding like what kind of product you're going to bring to the market, like why, understanding the investment thesis, looking through like financials, understanding where you're going to get your money from, your equity, your debt, that kind of stuff, the strategy behind it, the strategy behind your media, your marketing, your
Hmm.
it really it's all the stuff that even happens before any of those pieces come into play. So once you get to that moment, the pieces are the same. But I began to see the process and work for companies that handled the process before those pieces even came into play.
Maybe I'm wrong. It sounds like on the commercial side, because it's a business, there's a lot more forethought into the marketing of it as well as the financing pieces, the business model of it. Because, like, are you trying to pre-sell those units potentially before you even break ground?
Right. Yeah. And not only that, but also you have to understand what kind of units you're bringing into the market. Like, what audience are you targeting? And once you understand what audience you're targeting, that should come before the design of the units.
Oh,
Yeah, you're not going to build the same if you build like market rate apartments versus, let's say, like a luxury condo. Like, it's a completely different process. It's a completely different unit size, different finishes, probably a different neighborhood in most major metro areas. So, understanding all of those things and really kind of how you approach that work. And don't get me wrong, a lot of architects are able to help a little bit with that. But because their focus is so deep into the detailing and managing the team, that it really is the developer's job to ensure that whatever it is that they're bringing to market is effectively going to sell, because that's honestly at the end of the day how you make money for your investors and how you stay in business.
so after you graduated with your degree in architecture, you went and worked for a real estate development firm doing these types of things?
I graduated in 2008. There was no jobs to be had. We were basically told, like, you're all going to have to go to grad school because nobody's getting a job here. So I went on to grad school and I got a degree in urban design. And from there, I went and I worked for a large architectural firm in Manhattan doing commercial projects, commercial development projects in New York. So I basically worked for an architect who did all of these projects for developers.
And what did you do for them? Were you an architect?
Yep, yep. I was a staff architect and we did work all the way from feasibility to, sometimes they needed certain models done, ensuring how many units can you get, can you squeeze it to the site, like what massing needs to look like. So we would work, New York has very complex zoning. So we would work with zoning council to make sure that your massing is correct. Then we would do all the layouts, do all the schematic design, make sure that, sometimes we had a lot of historic preservation components to it because you are in New York, so you're working with existing buildings or in historic districts. So we would then make sure all those presentations were adequate to get all your approvals through historical preservation and also through building departments.
All right, now's the part of the show where I feel the most uncomfortable, but my therapist says I need to face my fears. So here we are. I've started a newsletter and I want you to subscribe. And what you're going to get every single week are the aggregated conversations from that week that I had on this podcast with an overview of what their business actually looks like. I'm also going to throw in a review of one or two businesses that are listed for sale. I'll give you my opinion on whether or not the EBITDA multiple is good, or there's customer concentration, or there's red flags or green flags. And then lastly, I'm going to give you one piece of actionable advice every single week on how to buy your first business. So click the link below, subscribe to my newsletter, and let's get back into the show. That piece that we were just talking about, the I don't even know, market analysis or
Yeah.
design process, et cetera. Do you offer that in your current firm?
Yeah, we do that.
So how did you learn that? That seems like a very specific skill set that you're not necessarily taught in architecture school, unless I'm
Yeah.
sorely mistaken.
No, you're right. As an architect, I think you understand that it's a force and an important part of development, but it's not necessarily where the majority of the focus is for an architect.
Mhm.
I think for me, a lot of that, and then really when I came to understand that was when I went to work in development. So I worked in architecture. I practiced for a while. I became registered, and then I went to work for a real estate developer in Manhattan. And that's where I began to really understand the sales and marketing and sort of the planning stages that happen before you engage the design team. So that's where I picked up a lot of that sort of knowledge.
Give me an idea of like the size and scope of these types of projects, either that you're working on now or that you were working on,
Yeah.
just so I can have an idea of like what's a commercial project.
Yeah. Well, I mean, obviously, you can have commercial projects that are $2 million, but
Okay.
I was working in large scale stuff in Manhattan. The first two projects that I worked in development in New York were each 500,000 square feet. They were office to residential conversions. So we converted office buildings into apartments. So I wouldn't say that a lot of people have had that kind of experience, but that's where I started.
And how do they charge? Like, do they charge by the square foot? Are you like, well, it's a 500,000 square feet, and we typically charge $10 a square foot, and so it's $5 million for this project? I have no idea how the pricing works.
Yeah, that's a good question. So there's several people who make money off of this, right? So the developer obviously has some fees. Generally, a development fee on a project this size is somewhere between 3 and 5%. And that gets charged to their investors. And that's upfront, and that's part of your business model and what you present to the people that you're raising money from. As basically an owner's rep or development manager, which is what we do now, it is industry standard to charge a percentage of the cost of the work that you're managing. So sometimes that means a percentage of the cost of the work of the design team and the construction. So it varies depending on project size. It could be somewhere between 3 and 10%. Again, like the larger the project, obviously the smaller the percentage you're going to be charging. But we don't charge that way, not my company. So just because it's a terrible incentive, I think.
Okay, well, I'm going to get to how your company charges in a
Yeah.
little bit, but
Yeah.
I'm trying to just wrap my mind around like a 500,000 square feet sounds like a lot to me.
It's large.
What does that translate to in dollars? Like, what is the total cost? Not just to your firm
Yeah.
that was designing it, but like the development cost for that
Yeah.
conversion.
And I can't speak specifically about those projects for multiple reasons, but I could tell you something like that in New York is probably going to be somewhere between definitely north of like $300 million. And I would
Oh
say
my
somewhere
God!
between really, 5 and $800 million today if you were to
Wow.
do between the acquisition cost and the cost of the work.
I'm just going to use because I'm a simple man. Let's just use 500 million because that's like an easy number. 500 million for 500 or 500,000 square feet. If I were to do that same project in, say, Dallas, or just pick any other city that's like lower cost,
Yeah.
what would a like comparable cost be to do that same development?
That might be tough. I don't know. We would have to pick a specific market because every market is really different. Like we've built in about 35 different jurisdictions at this point across the US. And whenever we price things, it can vary tremendously. I
Okay.
mean, obviously commodities are commodities and they cost what they cost, but your labor costs are going to be super different in Houston versus New Jersey.
Is there a market outside of New York that you know really well?
I mean, I know a few markets really well at this point, at this point
Okay.
from having worked in them.
Name one that you know really well.
I mean, I know Salt Lake City pretty well,
Okay,
actually.
Salt Lake City. If you were to do a 500,000 square foot commercial project in Salt Lake City, give me like a ballpark range
Like
of
residential.
like similar to the one you did in New York, right? You're converting.
I'm
Converting.
using my calculator.
Yeah,
So
no, you're good. You're either phoning a friend or using your calculator. Either.
So I mean, here's the thing, and I'll just caveat that project in New York, the one that I can speak to, and that this is all public. Like 20 Broad Street, it's actually been in the news recently. I won't talk about that part, but I know that it was a ground lease from Vornado at $185 million. That was the acquisition of the building, essentially. And then the actual work, originally, the owner of the development company has been quoted saying that the work was going to be $100 million. But that was like back in like I want to say 2015. The work ended up being more than that, but not,
Yeah.
not insanely more. But at the end of the day, like let's say it was another 150, you're talking about a $300 million project all in. And that was converting 500,000 square feet of office to residential. If you look at Salt Lake City, I don't know that we have a 500,000 square foot building to convert to
No,
residential.
no, you don't. I'm not trying to trap you. I'm just trying to like, okay, if it's 300 million in New York,
Yeah.
is it 200 million in Salt Lake, or is it like 50 million in Salt Lake? You know what I mean? I'm just trying to like get an idea.
Yeah, I mean, this is just a hard question to ask. Let me see if I can
That's
answer
okay.
it in a different
That's
way.
okay.
For example, if I'm looking at new construction in Manhattan, which I am, and I'm looking to do luxury residential, I am going to be underwriting things depending on the neighborhood because that has access implications and level of finishes that I'm looking at, somewhere between $700 and $850 a square foot for new construction. If I'm underwriting the same thing, if I'm doing like the highest end thing that I could possibly do in Salt Lake City, and I'm looking to underwrite that for new construction, I would probably be underwriting that at like 450 to 500.
Oh, it's way lower.
Yeah.
Yeah. All right. So from 750 to 450 is $300. Like it's almost a 50%
Correct.
reduction. Okay.
Yeah.
Crazy. Okay.
Yeah.
Now that I led us down that rabbit hole for no good reason, I'm sorry. When did you have the moment where you were like, I should start a business around this? I think I could actually go out on my own. Yeah, just walk me through what you were thinking and why you decided to make the leap.
So there were a few things. The first thing was when you really get into development, so I worked for that developer in New York, and then I worked for another developer who did national projects, but they were a REIT. So, and I think that was the first time once I really started understanding how the REIT worked and how the fees worked. I had a P&L for my team at the time when I was there. And I think very quickly you realize like how much developers are charging their investors for the work, and then the salaries for the team that you actually need to do the work. And there's a good arbitrage there. So I think at one point, obviously, there was that sort of economic aspect of it, obviously. But going out on your own is no joke, right? Especially in an industry where so much of it is based on reputation and word of mouth. So there's a real consideration there where like it's not just the money. So at one point I did realize that if I did go on my own, that I was going to be making a whole lot more money than I was working for someone else. And the value that I was bringing to my clients was probably also going to be well beyond what they would be paying me anyway. So it was a great value prop there.
Let me dig into this because that is interesting what you said. I'm trying to wrap my mind around it.
Yeah.
In my mind, the developer goes and says, hey, I found this piece of ground and I want to build this project, and the project's going to cost $100 million. But after it's done and we get it stabilized, it's going to be worth $200 million. And so there's a delta there. And as the developer, I take a certain percentage of that delta. The investors get the rest of the delta. But it sounds like what you're saying is because there are fees associated with building it.
Correct.
They're also passing that through to the investors. And it's not just like an at cost thing. Correct. Or are they saying it's at cost and they're just marking it up?
No. When you're doing commercial work, it's fully audited and investors can see they should be able to see what your costs are. But the developer has to charge you need a team to build these projects, right? Like you got 500,000 square feet, you're going to have 2 or 3 people working on that thing. It's an incredibly stressful job for the project managers, especially if they're on site. They're there every day. You're going to have people who have degrees, qualifications. There's another aspect to paying your project managers well that I'll touch on, but that costs money. That's like a real cost. And so just the same way that there are some reimbursable costs for a fund or an SPV, the developer will go and charge investors for it. They'll say, look, these are my reimbursable costs, but also like it's going to cost me, 5% to do this. And there's a lot of conversation around, especially around syndicators who do sort of smaller commercial stuff. They charge like really high fees. Sometimes you'll see projects that don't have a meaningful amount of project management, or like, let's say that it's not development, but let's say it's value add. And you'll see a syndicator charge like 8% on construction. And you're just like, what are you doing? There isn't like, you're not really managing that much. Like, why are you charging that much money? And it's a huge debate.
It can be gray, right? You're like, oh, it's 5% or it's 8%. And like, well, we have an on-staff music therapist that helps our team relax so they can design the best, architecture or whatever in the world. So that's what you're talking about is like, hey, there's a big delta there. Right. So there's economic incentive.
Yeah.
That isn't necessarily aligned with the investors. And then from your perspective,
you do want them to charge some fees. You do want them to hire a good team, right? But there's sort of there's a line there, right? Where beyond a certain point, are you really paying a good team, or are you just making a bunch of money on fees from investors? And regardless of how the investment goes, you're going to make money anyway. And that line, it's a fine line. It's a real conversation to have. And it's a real question to ask sponsors, developers, what are you doing with that money? And like, how are you thinking of it? Why do you think 5% is fair? And there should be an answer to that.
I think that's a good question. Was that a question that was a driving force for you to decide to go out on your own? Or is it just looking back that you're like, oh, that's why we've been successful, is because this is a differentiator that we're able to offer?
It's a mix. I think understanding the economic component and how the fees worked was one of the catalysts for me to think about, okay, well, a developer is charging 5%. They don't necessarily want to build the team that you need that is going to be sort of institutional level and highly qualified to do the work the way that my experience follows, which was institutional. I worked for a REIT, I worked for a major developer in Manhattan. We have that experience. Hiring me full time and hiring two project managers to do all the strategy that we do, plus all the technical stuff that we do, would probably cost, I would say, I always say it's like the $1 million team. So it would cost you a boatload of money to keep us on payroll. And if you don't have the pipeline to do it, it doesn't make sense. So at that point, the best value prop that you're going to have is hire somebody that will work per project. And there are fees that you're charging investors that are tied to that project. So you're not having to carry all these people as part of your payroll. And real estate has cycles, right? So up and down, up and down. Like, what do you do with all these, these people who are now on your payroll who, if there's a change in rates, now you can't make a few deals pencil. And so what do you do? You lay them off? Like, what do you do? My answer for some people is just don't hire an in-house team at all. That's why owners reps exist. And that is not something I invented. That's just the industry. Where I found that we had an edge and a much better way of approaching it is, number one, in the way that we manage the work and the way that we structure our fee. Just because I think it's a better model versus the typical charge as a percentage of the construction costs, because it's a terrible incentive. And I managed reps while we worked for developers. Like, there were reps that we hired for themes, especially for the national REIT, because we had work all over the place. It was super big. I was at the beginning of the creation of that team. And prior to that, they hired reps. So seeing how they charged, and there was it wasn't a super transparent process. So there were a lot of lessons from the managing reps that I learned that I said, if I were to do this on my own, these things are things I wouldn't.
Oh, okay. So you were managing these owners reps. The ones that you're saying is like, hey, don't bring an in-house team, just consult with us when you need projects done. I think one thing that's interesting that I didn't really think about is, have you heard of cost plus with the government?
Oh.
I don't know about real estate, but in the government, they sign a lot of these defense contracts.
Yes, cost plus.
And they're cost plus, right? And surprise, surprise, all of the contracts tend to go over budget. Correct. So weird. And so there is this economic incentive, or at least there's an economic disincentive for them to be efficient. Because, where is the penalty? Whereas with you, it sounds like your company's not necessarily charging a percentage based, they're a fee based.
Correct.
Firm? Okay. What year was it that you decided to go out on your own?
So I officially started my company in 2017, and that initial motivation was less about the economics of it. And it was more about really thinking that in development and construction, we're not saving lives. It is super stressful. We do have some projects where if you don't open a hotel at a certain date, you're losing like $100,000 a day. And that's real pressure. Yeah. So that, I think, despite understanding that it was a high pressure environment, high pressure job, you didn't need to make people's lives miserable, and you didn't need to be a horrible human being in order to. And that was my initial. So I started my company in 2017. So before I worked for the REIT, I sort of got to see a lot of how development worked and how people treated other people. And I said, I think there's a better way. And if you really truly believe that, like, go open up your own shop. So I started just doing side work for friends in New York, people who didn't necessarily know how to go through building department process. So that's kind of how I started. And then just doing side things like building conditions reports and all kinds of other architecture adjacent things that touch development in some ways.
I talk to people a lot, and I'm like, in my mind, the safest way to enter entrepreneurship is to launch a business or an agency around you and your specific skill set, right? Because it's like, I know how to do this stuff. I'm already getting paid X number of dollars. I can do it. You're super smart. You're charismatic. I'm sure you connected really well with people that you were working with. Did you find it easy though to effectively replace your income, or like how long did it take you to get to a spot where you felt good about where your business was?
I started officially in 2017, didn't fully go all in until, so I moved to Utah, family reasons. And the idea was that when we moved to Utah, I was going to wind down at the REIT where I was working. I was on a plane 10,000 miles a week. It was insane. It wasn't sustainable. So I was like, I'm going to open up my own shop. I'm just going to do national work and it's going to be chill. And then COVID happened. And so my entire team got laid off and I had 23 open contracts across the country. I needed to make sure that we didn't get sued. And I ended up having to stay for longer than I expected. But at the same time, I knew that team was winding down. So I was also going to be let go at some point. So I had to start immediately. So it was one of those, like, it took me longer than I would have wanted to be on my own. But at the same time, I had to start my shop quicker than I had expected. It was this very weird COVID related. Yeah. So I started my company and no employees. And I really, more than anything, we're in lockdowns. I'm in Utah. I don't know anybody. I don't have a network. My entire network's in New York. I did have some national contacts just because I had been doing national work for the REIT for about 2 years at that point. And so I got on social media and I just started posting and I started meeting a bunch of people and sort of it was weird because we didn't know what the economy was going to do during COVID. So those first months were really strange. And then I was fully on by the middle of, I would say 2020, because what I did is what you're supposed to do when you open up a new shop is you pick up the phone, you call everybody and you tell them like, hey, I'm doing this. And so it's the middle
Yeah.
of COVID, like things are really weird. And I'm calling everyone. I'm like, guys, I started a new company doing work that I remember when I started, someone that I'm super close who is in the industry was literally like, what are you doing? Like, nobody knows who you are. Like, how are you going to get clients? And I was just like, watch me. So I basically
Chip
called
on
everyone.
shoulder activated.
Yeah, exactly. Essentially, by the end of 2020, I had fully replaced I was already making more money. I had fully replaced my salary. I was making more money on my own than I was like as an employee. It took, I
Wow.
want to say maybe like 2 months and I had more. Yeah.
So what is your customer acquisition process? Because like I can't imagine some large commercial real estate company is like going to Google, how do I find an owner's rep? You know what I mean? Like it's not Google or Facebook ads. How are you currently acquiring customers?
Word of mouth, repeat clients. And I have a newsletter and I post on social media. I don't do
Ah.
any paid outbound. It's all inbound.
Well, and like your line of work's really hard. Everybody loves SaaS, right? Because it's recurring revenue.
Mhm.
It can be reoccurring, right? It can happen again from the same client, but it's not recurring. You're not necessarily like just paid on a retainer. So you constantly have to be out there prospecting or like finding new business. Which one of those is the best funnel for you? Like where do you get the best leads from? The newsletter, social media, or word of mouth?
It's tough to pinpoint because a lot of times it'll be word of mouth. Like someone will recommend me to someone, and then that person's like, "Oh yeah, like I signed up to her newsletter." Or, "Oh yeah, like I've heard of her." Or like, "Oh yeah, like someone else also recommended her." So it's a very tough. It's tough to pinpoint at this point. Really, I would say the stickiest is certainly word of mouth. It's people that I've worked with who know me,
Right.
and my repeat clients. I want to say to now, like in the last 5 years everyone that I have worked with, about 50% of them I've worked with twice.
So how many subscribers do you have to your newsletter?
So we're around 10,000 right now.
10,000. How did you start that at the same time that you launched the firm? Or were you like, oh, wow, I'm getting a lot of social media inbound. Maybe I should capture these people in a newsletter. How did that work?
Back in a time when social media or Twitter specifically was a lot more of a community and there were a lot more interested people. Uh, I would get a lot of very complex and thoughtful questions. And so I was like, there's got to be a better way of addressing this because we also didn't have the chunky tweets, right? Like we could only do threads and you were capped to 280 characters. And it was just very like, okay, like this just makes no sense. It's like a stupid format. So I started the newsletter just because it was a good way to share longer form.
I was going to ask you on the customer side of things, it must be weird because word of mouth is important, but you also have strict non-disclosure agreements with these developers.
Yes.
You know what I mean? Like
Yes.
in my mind, your business would be perfect for Instagram. Take a picture of a project you worked on and post it, right? But you
No.
can't necessarily do that stuff, can you?
I can't do that at all. It's odd because people are like, "Oh, how do you feel about that?" And honestly, I prefer it. I would rather like let's talk about the project in 5 years when we're done. Like, I'll be super happy to show the finished things. I think there's a mix of obviously the very private business things that happen on a project that would hurt the project if I share them. And you don't always know what those things are. And so I would just rather not share anything at
Yeah.
all, because my job is to move that project forward and to look out for the job. And I don't want to make a mistake that would hurt the project. That would be like not doing my job at all. So,
Okay. Here's the last thing I'm like really curious about your business.
yeah.
You live in Utah.
Yeah.
Most of your, I don't know, most of your projects are not in Utah, I'm assuming.
Correct. I don't have
Okay.
any projects in Utah.
What's your differentiator? How are you managing all of this stuff around the country and continuing to get new business? Because you're obviously doing a good job if the majority of your business is coming from word of mouth. Like, what do you feel like is the differentiator for you?
I have a kick-ass team. I work with really great people. I'm not a one-man band. Like, there's no way I could do the work all myself. I'm extremely fortunate, but also I've been working with these folks for a while, about 5-6 years. We have very tight processes. We understand how the process works to the extent that we can carry that process to many different jurisdictions. We rely a lot on local teams, like local civil, geotech, architects. So, and also too, the having our clients, you believe in us and what we do and sort of empower us in front of the team. And that's also a huge part of it. So I think partly the way we charge, the way that we're very available up front, we're very agile, we're very quick, we're also very technically strong. My project managers, we're all either registered architects or professional engineers. We all have construction experience, consulting experience, and development experience. We put the job in front of the client. So that, I think, is really what makes us a bit different than most.
I'm curious, do you have any international talent? You're working in Utah, right? You're not necessarily in each one of the markets. Is this a business where you could outsource to South America or Southeast Asia or Europe?
No, I mean, a lot of our work is extremely technical. It's extremely relationship based.
Okay.
There's like a ton of trust that we need with everybody on the project. And a good portion of it, I say we're remote, but we're not remote in the sense that we do see our jobs. We see every job once a month.
I have some rapid fire questions for you to wrap up. Is that cool?
Let's do it. Yeah.
All right. What do you love about this business?
The people.
Your team or the customers, clients?
Both. And the outside teams too. Like the fact that we get to see such a wide breadth of humanity is pretty neat.
What do you hate about it?
What do I hate about it?
Oh, you gotta have something you hate about it.
The fact that but I also love it. So it's the tough
That's
one.
okay.
I love it and I hate it, but I hate it that it's incredibly difficult to scale, for sure.
Is it difficult to scale because it's so dependent on you?
And not just me, but it is dependent on a person. It is dependent on the project manager of the job.
So basically, if you wanted to double in size, you got to find twice as many project managers.
Which I wouldn't want to double in size.
Yeah, no, I'm just saying that
Exactly.
Because it's so people focused, it's not like you can all of a sudden find a new technology that leverages one person to double their efficiency. That's interesting. This is one of my favorite questions. What industry or business are you the most jealous of right now? And don't give me some emotionally intelligent bullcrap answer like, I'm not jealous of anybody. Like,
no. I'm trying to find people that I'm jealous of. So I'm on this group text with the ladies who play tennis in my neighborhood. And they have this constant chatter of like, they always play doubles. I am incredibly jealous of these ladies who play tennis at 2:30 in the afternoon on Tuesdays.
okay.
Incredibly jealous. So maybe being retired is the thing. I don't know. I'm jealous of those people.
I'm going to go ahead.
All day.
I'm going to go ahead and tell you right now, you can add me to the group text because I go and play tennis at 2:30 on Tuesdays.
Right?
My wife and I just joined a tennis club. And it took she was trying to convince me for a long time. And we finally joined it. And
so fun.
At least once a week, we sneak away for like a midday date and play. Dude, it's so fun. I can't believe how fun it is.
Exactly. Those people I'm jealous of, like the people who not just like on Tuesday, but it's like Tuesday, Thursday, Wednesday. Like it's like every 4 or 5 days a week are playing tennis.
Yeah. Yeah, because your business in particular, like you're in control,
Yeah.
but it, it's hard to remove yourself from the business.
Well, but stuff needs to get done too, right? Like yesterday, for example, I played tennis at lunch. I played tennis at 1 p.m. But I started my day at 7:30 and I ended my day at 6:30. So
I've never asked this question before, but I'm gonna try to sneak it in on you. What's the biggest dollar amount project you've ever worked on? How much was it?
about 350 million dollars.
Okay. That's big. Okay. If you have 2 hours in your day and you don't have any work responsibilities and Bear's not there, trying to get you to take him on a walk or family responsibilities, what are you spending your time on? What are you obsessed with right now?
Playing tennis.
Okay. Great answer.
But also, I started a development company in New York. And so I am kind of obsessed right now too with just street view, walking around the streets of New York if I'm not in New York.
All right. Last question. What advice would you give to your pre-entrepreneurial self?
That all that technical, all the studying, all the legitimacy, all the technical skills that I've spent a lot of time learning, and all those relationships I picked up along the way definitely paid off. Like, because there were so many times when you're just like, should I really be studying this?
Yeah.
Is exactly like, do these people really think that I did a good job? Yeah.
They don't. They don't. I'm sorry. I'm just kidding. All right. Well, this has been awesome, actually. This has been a freaking blast. Where's the best place for people to come find you?
They can find me on my website, madproject.com,
How do you spell
MADD
it?
project, MADD project, singular. You can find me on Twitter. I'm easy to find.
Well, next time I am down in Utah, staying at the Montage, we'll play some tennis.
Love it. It's a date. I like it.
All right. Thanks, Antonia.
All right, Nick. Thank you.